Yo, what's up? Hey, we're gonna keep this plain and simple. This is gonna be a quick video. This is not gonna make you profitable. This is not gonna be some super advanced options trading stuff. If you already trade and you watch this video, I'm gonna be so upset because I commit so much time to you not trying to watch videos like this. But if you're new to trading, welcome. Obviously, look, I'm here to help you understand options. That's all this video is for. It's just gonna be a quick impromptu to help you become better at just kind of understanding this process and how I make some internet money. Let's get straight to it. I made a fancy little intro for you. This is gonna be a little serious for me. I kind of want to just build every single time for y'all. It's not gonna be some crazy information just yet, but I promise you, you build these with me, you're gonna have a really good understanding of how this all goes on. Again, if you're really serious about this, you can talk to me whenever you want in my Discord. But again, if you just want to watch these videos, welcome, what's good? We can just get straight to it. What the fluff is an option? What is an option? This is so overlooked. A lot of people be trading options and don't know what an option is. You wonder why they don't make money. These are basically contracts that give you the right to purchase an underlying asset at a specific price. I know, it's a lot. This is a really good ideology for, again, someone who is wholesaling. You get a house under contract at a specific price, and then you find someone who's actually going to use this house, maybe fix it up, do whatever they want with it, and you sell it to them, but for a little bit more, say like $135,000. You get it under contract for, you sell to them for $150,000. Okay, you keep the difference. Same thing applies here. We buy contracts every single day for about, $100, $50, whatever, and we flip them for, who cares, $70, $150. You make that margin in between and you keep that. We're not holding on to these, we're not exercising them. We are just simply taking the median. So what we have to do is we have to find value in these stocks so we can make money, so we don't have to work a job, so we can go outside on the weekends and go to clubs, party, go golf, do whatever we want, and not have to worry about a damn thing. Calls and puts. These are the two backbones of options trading. Holy crap. Options trading is split up into two different directions, calls and puts. If I'm trading any sort of calls, I want to see the market go up after I purchase. If I'm playing with puts, I want to see the market go down after I purchase these contracts. You pick up what I'm putting down. Calls are bullish, green. Puts are bearish, red. You can see a previous trade I took right here. The green, it filled the green. I made money. If it would have went in that red, I would have been screwed. There's a bunch of different types of things you can there's a bunch of different things you can do inside of those two. But again, we want to stick with the naked calls and puts, the most basic stuff, the what we trade every day. Super simple process. Calls green, puts red. That's such a beauty about options trading, is we don't have to wait for a certain stock to go to a certain price before we buy. We can play both sides of the market. So no matter if we're in a depression, no matter if we're in a bull run, we can take advantage of the market at all times. That's why it's such a good thing to be inside of, is because we have the opportunity to play both sides every single day. I just want to go over the basics of day trading with you. Again, baby steps, dog. Eastern time, market opens at 9:30. I trade about until 11:30, 12. After that, the market gets kind of wicked. You don't like trading in that low volume hours. Volume is activity in the market. Most people are done around lunchtime, come back maybe an hour left until the market close, but we don't want to be sitting around all day doing this. We want to premeditate our trades in the morning, take them in the early afternoon, get our money, get out. My Instagram's in the bio, by the way, follow it. There's going to be news releases every day around 10 or 2 o'clock. You need to find these out before you trade every single day on forexfactory.com. You never want to be trading on high impact news days or during news. Okay, so around 10 o'clock to 10:15, there's kind of this red area where you should never be trading. We want our trades to be solely based off price action and not news based, because that's where we can really get screwed. You don't want to get screwed. You should always be on Webull or TD Ameritrade. Robinhood's trash. And again, bro, this is just the basics. Kick back, enjoy the process of you learning everything. I promise you, if you stick with this, it's gonna really start to develop on you. Oh God, bro, how to chart. This is called TradingView. It's where everybody charts. I highly suggest you go on it. It's a free website. There is a paid side that I do pay for, just because again, this is my freaking job. But again, it's probably the easiest place to understand how to chart, get your own charting system down, understand how to evaluate this, because it is the most important part of eventually doing this full time. Quick PSA, if you make your color scheme not red and green, if you make these candles a different color, you're a loser, and I will come to your house and punch you in the throat. Again, I don't want to overcomplicate you day one. I'd say the most important basic thing on how to learn how to chart is just supply and demand. There's supply and demand everywhere. So what we're going to do is just, how do we find that in the stock market? Because again, this is a game of supply and demand. Everything is based off of how much people are wanting to pay for it, and vice versa. So how do we evaluate that within the stock market and within the charting is, again, always use candlesticks. I know you may see people like on Robinhood with the lion and stuff, bro. That doesn't tell you anything. Candlesticks are basically every single one of these individual red and green boxes show me exactly what is happening within a certain amount of time. We're on the 2-minute time frame right now. You can see basically what this is showing me is every single 2 minutes within the market this is exactly what's happening in the candle. Red obviously is an incline in price, and then, oh my god, I said it backwards. Green is an incline in price, and then red is also a decline in price. So what do we see right here is we see a nice big push out of SPY. That's good. We like to see that. And then you see a consolidation at this top. You see this big red candle. This is a huge red flag. You see during this 2-minute time frame, this is showing that at one point SPY pushed all the way up to this high right here, but then again sellers pushed it all the way back down to this close, and you can see what happened after we shot down. So how do we evaluate this? So what we would do is what I already have up there is I would come over here, select my highlighter, go to my rectangle, and then I would place a rectangle right over this wick, because the wick is the most important part. The wick is going to show us this was a high liquidity sweep. Price ends up dropping, consolidating, and rising back up to this high. Okay, what we would do here is if we're solely basing it off of supply and demand, we'd hop in a trade around here, and again I would have my stop loss above this high, because again if we break that, it's technically a breaker structure, and we would maybe see a higher move. We would keep our stop loss above that, and then we could probably target this low or even halfway down, and then you can see what happens. We reject off of this previous level. Why? Because it already was shown that sellers like to sell positions here. This isn't just a random robot moving the stock. This is actual people taking profits at this level. So what we know is comes back up here, we enter our position because we already know there's a massive level of sellers here. And again, options, you can play both sides. This would be where we would enter puts because we want to see a move down, and you can see that was a glorious move down. If you held through all this, you're like stupid rich. But it didn't take me a lot to find that. That was just a simple box and a couple circles and a little bit of knowledge. This is just Webull Desktop. If you are learning trading and trying to get into it, do not get on Webull Desktop, bro. It's like trying to solve a bomb. I still trade off my phone. There's no hate in it. Again, it's just what I'm the most comfortable with because I've been doing it the longest. But again, I always look at my chart when I'm trading, so I always trade off my desktop off TradingView. Where I'm circling right now, that is called an order book. This is where all your options contracts for each individual stock are. I know it looks very complex. I'm just trying to give you the worst right now, but this will look similar to what it is on your phone. You can see right here, the 237 puts. You have a bid at 5 right now, okay? And then an ask for 510. People are offering to buy this contract at 500. So I know this looks like it says $5 and $5.10, which it does, but in options, every 10 cents we need to times that by 100. So if we look at this right here, and see 500, that means someone is offering to buy this contract for $500, but the ask is at 510. These contracts are more expensive, but again, they do hold a little bit more value compared to those SPY ones. But understand, this is the book. This is where you go to purchase all of your contracts. Opening and closing a position is really important to understand. It can be very confusing when you first start off. Again, if you are new to trading, you need to be paper trading on Webull. It's something that they offer. It's just fake money trading. You still, live stock market, but you just trade with fake money. If you don't do this, you're going to lose money regardless. So I really suggest you start paper trading and take it seriously. How this goes is we want to enter our contracts. Write this down, you idiot. Enter our contracts with limit orders. It's going to give you the option with a market, a limit, and who cares what the rest is. You always want to enter your contracts with a limit order. A limit order pretty much lets you set the price of what you want to buy these contracts for. So obviously it needs to be something that they would sell it to you for. It can't just be $10 because you want to buy it for $10. On that previous example, it would have to be $510. So if we set it to $510, we know for a fact that our contracts will be purchased at $510. We always want to enter as a limit order so we know exactly how much we're going to be spending for this contract. Whereas when we're selling it, that's where we want to hit the market order, because again, we want to quickly get rid of these contracts. That's it. Again, super basic intro, but again, I want to build off this with you. I live trade every single day with Chicago. So if you're interested in that, you know where I'm at. Also follow my Instagram. You know what it is. I love you boys. I appreciate you. Be safe.